The UK tax authority was sued again over Fatca. For those of you that don't know who Fatca is, it's the Foreign Account Tax Compliance Act. It actually came about back in 2010, and it actually went in force a few years later. And what's happening now is a lot of these banks overseas, you'll find out if you don't relinquish your U.S. citizenship, but you start setting up foreign bank accounts, you're going to find out that a lot of these banks and brokerage companies will not deal with any U.S. citizens because of all the compliance and stuff that has to be done. And if the banks don't agree to do it, to hand over that information, which is basically very transparent, you can't hide money, so don't even try to do it, is what happens is if the banks don't do it, there's an automatic withholding on all the money, not the profit. It's approximately a third of everything. So you're going to have to be, if you're going overseas, okay, number one, you need to be reporting this money. If you don't like it, then you ought to relinquish your U.S. citizenship. You're also having it from other high tax countries like Australia. With the common reporting standard, people that are Australians trying to put it in Europe, it's not going to work. I mean, it works as long as you report the money, but if you're not reporting the money, it's not going to work, okay? Also, folks, if you want to legally get your income taxes to zero, how to get a second passport as quick as 45 days, do 3 things. Hit the subscribe button on the right of your screen right here, and you'll get new videos automatically as they come out. And don't forget to hit that notification bell next to that subscribe button. And number 2 is I would like to hear from you. If you got a question or comment, put it below. And number 3 is go to our website, www.citizenshipquickly.com, and ask for some help. Okay, now this came out in an Expat Route newsletter. It was a real good article. You're going to see more and more of these lawsuits that are coming about in the future, dealing with basically with different governments giving the money or giving over information to the IRS in the U.S. And a lot of people don't understand how Fatca works. It used to be that, people would put money overseas. Many years ago, 15 years ago, you didn't have to get back that far, and the IRS could not get that information. That's not true anymore, okay? And now with the CRS, the EU came up with the same good concept. They thought, well, gee, if the U.S. can do it, we'll do the same thing. So what they've done is they've compiled, there's just tons of these countries that are signing up. And we did do a video on the ones that have not signed up. But I'll tell you something, folks, if you're not reporting this money, you're walking on a fine line. If you don't like paying high taxes, man, it's easy. Just relinquish. If you're a U.S. citizen, you can apply for the foreign overseas exclusion and qualify for that. Or if you're from a high tax country like Austria, any other type country like Canada that taxes worldwide income its residents, simple. Just you need to move and be out long enough to qualify legally where you don't have to pay tax in that country anymore. It's that simple, and then you don't have to worry about all this mess. Anyway, this came out and it said the UK tax authority sued again over Fatca. The UK tax authority is facing another legal battle at the High Court over supposed breaches of the EU's data protection legislation due in its cooperation with the U.S. Foreign Account Tax Compliance Act, which again is Fatca. It's the second time that HMRC has been legally challenged on these claims, and by the same claimant, a dual British-U.S. citizen known as Jenny, and her lawyers at top legal company Mishan D. Rea filed the claim on October the 27th, 2021. And the challenge says that the sharing of Jenny's personal information with the American Tax Authority, the IRS, was done without her consent. Now, as data privacy regulations set out, and this it caused her personal damage and stress. Folks, you got to remember with this Fatca, they don't ask you if they can share you information. They just turn it over. It's that simple. They went on to say here that the issues being brought as a breach of EU rules, because when the information sharing exercise happened, the UK was still part of the European Union, and as such subject to the bloc's regulation, according to the lawyers. Now, lawyer Filippo Nozetta Jenny's representative at Mission de Raya said that Jenny's claim is symptomatic of the steady erosion of individuals' data privacy rights by governments. Now, again, what is Fatca? Okay, Fatca is legislation that was enacted in March of 2010 by the U.S. government, implemented the 1st of January 2013. The purpose of Fatca is to prevent American citizens from evading U.S. tax by using foreign subsidies to invest in the U.S. through foreign accounts. Now, Fatca imposes a 30% withholding tax on foreign entities that refuse to disclose the identities of their U.S. clients. Now, foreign banks and other financial institutions, including foreign insurance companies, must therefore provide the evidence to verify U.S. status within a time limit. Now, failure to provide evidence within the agreed time scale, or if the individual fails to disclose assets in full in their annual tax returns to the IRS, and the foreign financial institution must treat their account as a recalcitrant account and must withhold all U.S. source income and payments from them, and will also be subject to a 30% withholding tax. Now, this thing's pretty highly controversial. This legislation has proven to be highly controversial, they stated, and being described by critics as the worst law that most Americans ever heard of, that they haven't heard of. Most Americans haven't heard of this because a lot of people don't have their money outside the U.S., so they don't know about this. Now, for instance, DeVere CEO and founder Nigel Green has previously launched a Washington-based campaign against it. He said in his opinion that Fatca, of which he said that I've been a local opponent since it was first muted in 2010, is fatally flawed and discriminatory. Why? Because non-U.S. financial institutions are rejecting American expat clients in their chosen country of residence, as Fatca rules and regulations are deemed too arduous and expensive. And should clients possess assets exceeding $50,000? Now, it went on to say that thousands of American expats made their gut-rending decision to renounce their citizenship to avoid the adverse effects of Fatca. There are other options to consider, but that they feel strongly about. Like I said again, you need to be reporting this money if you have offshore bank accounts, folks. It's not gonna. You're gonna learn the hard way if you don't report it. Get around it legally. Relinquish your U.S. citizenship. Or if you're from another high tax country and you don't have U.S. citizenship, you need to break your ties legally from that country long enough to where you legally don't have to pay the tax in that country. Again, folks, you got to go by this. If you don't, you're going to have problems. If you want to learn more on this, go to our website, www.citizenshipquickly.com. Hit the top button that says Apply with Us. Fill out the questions. Hit that bottom bar that says Send it to us. We deal with over 100 citizenship by investment, residency by investment countries all over the world. Would like to hear from you. If you got a question or comment, put it below. And number 3 is, don't forget, folks, we got over 500 videos. Hit the subscribe button right here. You get them automatically every day. You don't even have to look for them. And you'll get some really good information from this. And don't forget, hit that notification bell next to that subscribe button too. And I look forward to talking to you on the next video. Take care.